Hello traders, today is the 21st of March. My name is Evan Hornsey, market and YouTrading, and today I'll be looking at the week ahead. Okay, first of all, we're going to start with the YouTrading.com Forex heat map. You can see here that the pound and the Australian dollar are battling it out for the weakest currency. Currently, the yen, the US dollar, and possibly the Swiss franc are battling out for the strongest. So we're looking to see that flows coming into the safe havens. And if we can see flows coming out of the commodity pairs, then we should be having a bit more of a risk off day today. However, the heat map definitely looks mixed at the moment. There's no sort of real clear direction. And a lot of that is because we're still trading on the news. So news headlines are going to be sort of market moving generally. But if we look at the week ahead on the calendar, for me, it's sort of split into two. We've got central bankers speaking for the most part of the early sort of few days of the week. And then we've got flash PMIs at the end. So I can't really trade the way I trade when we've got all these sort of central bankers speaking. You know, today it started with ECB President Lagarde speaking at 7:30. Later on, we've got Fed Chair Powell speaking. So the market's essentially going to be like holding off, waiting for Fed Chair Powell to stop speaking today. Then tomorrow, we go straight back into central bankers, starting with the RBA governor in the overnight session. Again, Lagarde speaks. And then we've also got Jordan from the SNB speaking. Now, he gets to speak a couple of times this week because on Thursday, the SNB actually have a policy rate decision. So far, the expectations are for no change in policy. So we're expecting to see minus 0.75% on their bank rate. So obviously, if there's a change either direction, that would be market moving. And obviously, the S&B have been sort of quick to surprise the markets in the past. Though for now, I think they're just going to intervene into the currencies when they feel like the Swiss franc's got too expensive. Right, going back to Tuesday and Wednesday. So central bankers essentially into Wednesday. Though we do have crude oil inventories and the UK annual budget. So that would be quite interesting. But again, I can't really trade that. Then we got FOMC member Bullard speaking twice, Wednesday into Thursday overnight session. Before Thursday morning, we get the start of the flash PMI. So the flash PMIs generally are market moving. Obviously, currently, the expectations are for them pretty much to all come in worse than previous. So if we do get a sort of a revision higher, then that'd be great for the currency associated with the PMI. So starting on Thursday, we've got French. Obviously, we're looking at the euro. But the big one is the German flash manufacturing and services PMI. If that were to come in better than expected, then that would be very bullish for the euro. However, expectations are for a drop in those PMI data points. Then we've got Thursday, 9:30, flash PMIs for the UK. So far, the pound is being hammered, even though we're seeing bank rates go higher. So for some people, we could be saying that bank rates actually depreciate the currency. So to look for as we get more US rate hikes coming this year. Looking to the left, 12:30 on Thursday, we've got core durable goods. Obviously hoping to see more durable goods orders come in. Unfortunately, the expectations are for less. Then we've got the US unemployment claims, so the initial jobless claims, the weekly thing. Obviously, the trend is slightly down at the moment, so that's good. But then we do have FOMC member Waller speaking. So trading should really take place after we get the Fed out of the way and then this US flash manufacturing PMI. Obviously, anything on the flash PMIs above 50 is expansionary, so that's good. We just kind of want to see a trend where it's going higher. But like I said, expectations are for lower. Then on Friday, retail sales for the UK, going into the German IFO Business Climate Sentiment Index. It would be good to see that pump up. But then we also get a revised University of Michigan consumer sentiment. Everyone's expecting it to come in as it printed first. So end of Friday, Friday come the US futures open, everything should be pretty much baked in and we can just trade the trend. So actually going into the news, obviously Ukraine and Russia are sort of dominating the news headlines. COVID's kind of been pushed aside, even though we did see rising COVID rates in China last week. Obviously, we're expecting to see bottlenecks in manufacturing. But it's this city in Ukraine, Mariupol, which is under siege. It's not the first time they've had to deal with attack, but this is kind of quite an intense one. If we go to Google Earth, we can see it here, sort of on the edge of the sea and very close to the Russian border. So we've got Donetsk above, and it's these Russian separatists that have been, since 2014 when Russia sort of annexed Crimea, they've been trying to get this city as well. It's an industrial city, mainly dealing in steel. So it's kind of quite important. It's obviously got connections to the sea. So it's a seaport as well. Right, going back to the charts now, start with the dollar. I'm going to try and stick to the weekly charts, try and get a sort of sense of what happened last week and then maybe what's going to happen this week. Right, so last week in the dollar came back down, tested the high, so the wick test of the 20th of February. So February wick high, tested that for reals on last week. The week before we kind of came down, but didn't quite get there. So now we're waiting to see if that holds as support. So if the $97.70 holds as support, then we're probably going to test the high towards the 100, like I've been expecting for a good week or two now. If we can't see this wick high support, then we'll come test the early Feb high here and the weekly 20 EMA. So this level, last week's low, very key. If we sweep that and then close below it on a daily, then I'll be looking for a bigger drop down towards the 96, maybe even down towards the 200 and the 50 here, which just crossed around 95. So this week's kind of pivotal, and last week's low is really key. Going to gold, see if we can get some sort of direction from that. Obviously, if the dollar goes down, gold goes up. So I'm thinking that we had a big swing high form last week now. If we get a lower low than last week, then that sort of opens up all the way down to 1812. There's obviously, if you just look left, a lot of volume around the 1800. 1800 is pivotal, but it could be that we get a push up on a weaker dollar into the 1958 dollars per ounce and then come back down. So if I just draw that in, so I'm expecting to see a test of this tail here and then a push down into towards the 1800. That's my base case scenario. Looking at the German DAX, now if we look left, we can see that this big red candle here from October, there's loads of sellers there. Obviously, all those sellers got overturned a week later and into the sort of preceding bull trend. That means if we look left, we've got a lot of demand down here, and you can see that we've now printed a swing low. So I'm expecting a push down into the high of March, down to the 14,094, then up to the 14,835 and this low here. So if we look at the RSI currently confirming, the price action. If we were to get above 50 on the RSI, then we might actually push above the 20 and 50 EMAs and then come and try and take this double top here. But I think because we've got dynamic resistance up the top, we've got this swing low. And obviously, if you look to the left, all these fractals here, you can see all the little red arrows. That's obviously a lot of support that got broken. So I'm just waiting for basically a breakdown, retest, and continuation lower based on the war in Ukraine continuing. Right, going to the Dow Jones Industrial Average. Now, some people are looking for a head and shoulders. This is actually a perfect time to get short if you are thinking that. Anyone that got short on the break of the neckline here obviously got overturned last week and would probably be looking to get out of their shorts, which means these guys can actually get a better entry, if you like, and then we can come down and test this weekly 200 EMA down at 29,000. I say it's a good one because if you were to get short here, if that was your sort of base case scenario, you get short and you can put your stop pretty much above the swing high here, the right shoulder, and test down here. So if you are looking for an asymmetrical trade, it's basically a 1-to-4 risk reward ratio. So that's good. For me, I'm not trading these patterns essentially, but I am quite interested to see that this low here from the early Feb low holds as support, as resistance, and then I'll be looking to sort of trade back down towards this high here, and that'll do me. All right, going to Brent. Now, Boris Johnson went to Saudi Arabia on the sort of hopes to get them to just get back to producing as much as they did before they did the production cut, try and ease this sort of energy crisis, if you like, because of Russia. It looks like there's no price action above to stop this from going a lot higher. So if we went down to the daily, that's what gives us a better picture. Currently, Brent is trading in this balance area here. So I'm now looking to this low from the 8th of March to hold its resistance. There, if we get a rejection of that, we can put our stop above the sort of blow off top high, and then we can look to come back below this swing low here from the 16th of March. But until then, it looks like oil's going to go higher this week, by the start of the week, which means we should be expecting to see the Canadian dollar go higher. And in that case, the dollar, like I said, if our base case scenario is that we come a bit lower based on the weekly chart. So just to remind you, we're waiting to see if we can get the dollar below last week's low. So if we look at the dollar CAD, obviously that would sort of go along with this sort of idea that if this swing low here from the 6th of March, so this March low was to hold as resistance, this rising trend line would be now set to break to the downside, and we could start to look for this sort of move. Obviously, it's going to probably take a bit of time, but if the oil's going higher, Canadian dollar's going higher, then I'm expecting to see the dollar CAD eventually come lower. Dollar's going lower, then we want to see the euro versus the US dollar go higher. Now, looking to the left, we've got this big sort of balance area here. So we had a low, a higher high, lower low. So lots of confusion, lots of trading going on around 2020. And if we just pull that out now, you can see that this swing low here, this is basically in the middle of this balance area. It's taken out, this low here from the 23rd of May. So they're sort of mid-May low. If we go to daily, go back left, we can see that the only high really that needs to be sort of tested is around the 22nd of March. But all the other sort of prices have now been sort of tested. So if the euro versus US dollar was to get lower than the swing low here from the March 2020, then I'll be looking to see this level here act as resistance. So maybe the 1.11 acts as resistance. On the daily chart though, if that does act as resistance, then there's nothing to the left as a target. So I'll be looking for a lot lower lows. Going back to the weekly though, we've obviously tested the low here from the 20th of February. So the week of the 20th of February, that low has been tested twice now. So there's going to be no sort of real resistance there. The resistance will be now back towards the 1.13, which is kind of what I mentioned last week. So if last week's high gets taken, then I'll be looking to go all the way up to 1.13. If the early March low gets taken, I'll be looking just to go a lot lower. So again, like I said, the first part of the week, I can't really trade anyway. So I might as well just wait and see how the first few days pan out, see what the weekly range is going to be, and then trade that. Pound versus US dollar, like I said, we've had 3 rate hikes now on the spin. So we saw the pound go higher, then it's come lower. It could be that last week's weekly high found resistance at this week's, well, the 27th, the week of the 27th of February low. If that's true, then we take out last week's low and then we head towards the 1.618 fib extension, which was from this high to this low to this high, extended down. But if you look left, we did find support there. Actually, make that green and fat. So the next one is actually all the way down here. So we could get through the 1.618 fib extension, could get past this old swing high from around June 2020, and we could actually come back down and test the week here, this week's high here, where we see this imbalance here, and the 1.27 down to the 1.26657. So if that happens, we expect to see the euro versus the pound go higher, and we can see that there's a channel to the downside. Now, channels can break in the opposite direction of travel. So we saw them sort of pop out to the bottom. Now, if we see them pop out at the top, obviously there's a 50-week EMA as a resistance, but we could see it compress under there and then do that thing where it basically break out, retest, and then continue up to the 200. So wait and see if that happens. And if we look at the RSI, we can see we had a weekly low here in April, and then this weekly low here for March, and the RSI is looking like it's essentially divergent to price. So this double bottom here that I've been watching before from late 2019, early 2020, they've obviously swept that, looked below, and now we could actually be seeing the start of a bull move. But we need to take out this swing high here at 0.84777 before we see that sort of breakout retest continuation. Dollar yen, looks like the yen's kind of given up sort of being the safe haven go-to. The dollar's obviously appreciating since FOMC Fed raised rates, and looking now to see if we can take out the swing high here from 2016 and then get above the 121.68. And similarly for the euro versus the yen, they came down on sort of the bad news out of Ukraine, found this high here from November 2020. That acted as support, and that's been confirmed now because we've seen the euro versus the yen go a lot higher, got through all of the sort of areas where you'd expect to sort of see some sort of resistance. Above the 20, the 50, and the 200 EMAs are all still bullish. So if we get back above this fractal high here from early February, then we take out this May, June 2021 high, in my opinion. And then we're looking towards this swing high here as the next sort of liquidity. So we'll make that red. So we're looking for a big continuation to the upside eventually. 137 would be the target. However, obviously nothing goes up, well, dollar yen goes up pretty much straight when it wants to, but we could be looking for a pullback to this wick test here, 129.03. That would be a good pullback, and then reload to go up, take out these swing highs here. So that's kind of what I'm looking at on the charts. Like I said, first 3 days of the week, not really doing anything. Going to keep my eye on the dollar, and I'm going to keep my eye on see these swing highs, swing lows on the weekly chart. Obviously, we've got momentum building in the dollar, but looking to the left, that's a lot of trading that happened back in 2020 to deal with, and they just might not have enough buyers currently. They might have to come back down, come back to this 96 level where we saw a lot of trading before, gather some more buyers before the next push up. Okay, if you make money this week, good luck, and try and hold on to it. Obviously, the Ukraine-Russia things are making everything quite sketchy. News headlines can keep volatility high, and your stock might get taken. All right, good luck, and I'll speak to you again tomorrow.